All right, hello, welcome. My name is Luke Knutson. I'm a senior finance student here. Most recently interned at JP Morgan in commercial real estate, where I'm going back starting next summer. I also did Smith, and I'm on the President Scholars portfolio team.
Yeah, I guess I'll go next. Hello, my name is Ryan Flores. I'm a fourth-year student here at Cal State Fullerton. This past summer, I interned at Pictet Asset Management doing business development. And this upcoming summer, I'm going to be at Wells Fargo for investment banking. As for TCM, I'm in the tactical portfolio.
Cool. I'm Edson Sandoval. I'm a senior here at Cal State Fullerton, and this is Top Down with TCM.
Nice. And today we're going to be talking about kind of the AI hype cycle, tech companies, the sustainability of everything going on in AI and their valuations. So yeah, we can get right into it with the first question, kind of just a general setting the tone. Do we believe that AI is a bubble?
That's a really good question. I think there's pros and cons definitely to AI in terms of the efficiencies that'll create, the synergies, if you will, that are created from it. However, I tend to think that a lot of investors are oftentimes short-term in terms of when they look at the earnings and making their judgments on whether or not this company is worthy of investing in. So for that reason, I don't think there's an immediate impact. I don't think AI has an immediate justifiable impact, and we truly don't know what the ROI is just yet. So I think that definitely should be something to consider as well.
Yeah, fair. Yeah, I think that's fair. I think for the most part, a lot of businesses have gotten a lot of investments into AI when it's really not going to return as much as they would hope. A lot of businesses like Robinhood, Taco Bell, whatever, like it's just like a chat plugin. And I think they're trying to make it seem more than it is. But for other companies like NVIDIA, who design their entire headquarters with AI, it's really useful in that sense.
Yeah, fair. I'd say, I agree it's going to be very variable, the beneficiaries of AI at the end of the day. And I also 100% agree that there's going to be some problems, valuation, like sustainability-wise, especially when you consider things like Moore's Law, right? That compute basically doubles every 2 years. So in terms of kind of the future value of that, every dollar spent on compute now cuts in half every year. Basically. So anything that depreciates 50% is going to be a really hard sell to invest in. And that's based on the expectations of AI, right? Is that it's going to completely revolutionize everything we do. Seeing a lot of similarities between that and kind of the dot-com bubble, that like we knew the internet was going to be a huge thing. It's very significant to us. Like we do all of our homework and a ton of our communication, and like we use the internet all day, every day, basically. But that didn't happen for a really long time, and people thought that was going to play out in 2000, when really it didn't really come to term for decades later.
So I guess like what our short-term view, bit skeptical, you would say?
Yeah, for sure.
Consensus, and then long-term, maybe we can say that we're a little bit more bullish, or if you will, in terms of like what AI will do for industry, I guess.
For sure. I mean, it's really hard to discount like the eventual value and like just how much leverage you can get out of AI, because you can, you put some energy and some compute in, and then you can get just about anything out of it, and like complete massive efficiency gains in businesses. But it is really a question of when we'll see that. And then I think it'd be hard to argue that anyone's benefited from AI hype more than NVIDIA. How sustainable do we think their business model is in terms of maybe quarters 5 analysis, and how long can they maintain their technological moat?
I think for a pretty long while. Their other competitors like have such a like microscopic amount of market share compared to them, especially like I don't know. I feel like their technology is advancing at a much faster rate than some of their other competitors, like AMD, for instance. And I do see them as like the number one for years to come.
Yeah, I guess I'm going to be a little bit more contrarian, or maybe a little bit more skeptical, if you will. I feel like with all technologies, there's always a rapid advancement, like Moore's Law, what indicates there's always a rapid advancement when there's a new technology. But I think at a certain point, there's just going to be little changes. For example, the iPhone. Look at the first iPhone to iPhone like 2, 3, 4. There were significant changes. But once we're like in our current generation, they're really only making microscopic changes. And even consumers, you see consumers are not looking to buy iPhones as frequently. They're not looking to upgrade them. They're only doing so when it's absolutely necessary. So kind of maybe it's not a direct correlation, but I'm thinking more so like for Nvidia, though has a vast amount of the market share. There's competitors like AMD and other smaller startups that I think could possess like a danger, if you will, to Nvidia further down the line. And with that being said, I also read an article by Sequoia Capital that said eventually they believe, and I do agree with this article, that these chips are gonna be almost like become like a commodity. So with the Pores 5 that you brought up, I think they're gonna eventually lose a significant amount of their market share.
Yeah, and then-
Even pricing power, if you will.
Absolutely, and yeah, I just want to note that like this is the same Sequoia article you're talking about. You sent in earlier that it's basically estimating out, especially with like the Moore's law and everything it's taking out to build out the data centers and the chips, a massive investment, and even just in like the next couple of quarters, they need to see hundreds of billions of dollars out of that we have no idea where it's going to come from. So yeah, it's a really good point there. I also agree in the sense that the like alongside the competition that comes out is like because Moore's law can't go on forever. Like we've seen that you can only fit so many transistors in like a nanometer of chip. It's going to cap out somewhere, and that's an opportunity for competitors to catch up. But also really like your point about how kind of the iPhone, in the sense that even if no one catches up, NVIDIA can compete with themselves, because like even though Apple has like such a head start on iPhone 14, 15, 16, people aren't like necessarily updating from their iPhone 11 or 12 because it's not that much better. So even once NVIDIA hits that, they might just be competing with their old models. People won't see a reason to upgrade to the newest one if it's not that much better. So yeah, and on top of competitors, they could just be competing with themselves. And then for our next question, do we see any parallels between now and the kind of what I brought up earlier, now in the dot-com bubble? We've seen a lot of valuation expansion. People equated Cisco with NVIDIA, and we were reaching some pretty high price earnings multiples based on like the promise of future earnings on a really like new and interesting technology. What do you guys think?
Yeah, go ahead. Yeah, I mean, I think like any hype, there's always gonna be a significant amount of interest. There's always people gonna be more drawn to that. So with that being said, I think this is a bubble. Whether or not it's gonna be as large of a bust, if you will, compared to past cycles, I don't necessarily think so. Just because I think that this is like something that's actually necessary. It's like a key component that will drive companies' efficiencies and things that we talked about a little bit earlier. So I don't think it's gonna be as large of a quote unquote bubble burst, but I think there will be a drop off in terms of NVIDIA's revenue or earnings and all the other companies that are competing against it.
Yeah, and that's perfectly fair. I mean, to quantify kind of that statement of scale is that Cisco was trading like over 200 PE in 2000, NVIDIA's in the 50s. So yeah, I think that it's much more rational. Who knows if it's rational in absolute terms, but in relative terms, absolutely. What do you guys say, Edson?
Yeah, I agree too. And I think part of like the valuation like expansion for both those companies is a little different just because Cisco like wasn't, their promise was more like intangible versus NVIDIA's is like a little bit more tangible. Like their products, like everyone's screaming to get them. Yes, they're kind of overvalued, but I don't think it's as big of a jump as what we saw with Cisco.
Yeah, fair enough. I mean, I think it's not even, you can even take the tech portion out of it. Like, there's always going to be momentum-based trading. I feel like we learned recently in Finance 340, there's like this odd lot theory that whatever retail traders are piling into, that's when institutional investors are leaving. It's probably a bad investment, but retail investors trade on momentum and emotion. And I don't think there's any more popular retail stock right now than NVIDIA and these AI companies. So yeah, I mean, even outside of technology, there's this kind of just maybe a thing that happens in the markets. Will always happen is that emotionality and momentum will just drive things up until maybe they'll drop off slowly, or maybe they'll come down to the crash, and I guess we'll wait and see.
Mhm.
But yeah, once things get to that point, we can generally assume that they're overvalued. And then just for a closeout question, everyone in every earnings call just about, we hear AI is one of the most used words. I think we can agree that there are some industries that are actually set to benefit from this, and some that it's completely overplayed, and that like there's really not gonna be much change. What sectors or industries do you guys think can actually benefit the most from AI?
Yeah, I mean, just to come off the top of my head, I'll expand upon the first one, the labor, like just like labor in general, just in any case, like even airlines, service, discretionaries and whatnot. I think that personally will like make the biggest like impact to like some of these companies, just kind of cutting out like part of like bottom line. Will I think make a giant impact on them. Secondly, healthcare, and I'll let Ryan expand upon that a little bit more.
Yeah, I guess I was put on a little bit of the spot here. I think for healthcare, since healthcare is like a very research-based industry, Luke said it well the other day, it's very like intellectual,
Like the research process is very, yeah, intellectual capital intensive.
intellectual capital intensive. With that being said, I think AI will definitely play like a large role in terms of speeding up the process for research and things like that. I think another industry that will be affected is the entertainment industry. Read an article from the Wall Street Journal this morning that stated that a lot of, I believe it was from Paramount, could be mistaken, but I believe that they're trying to kind of like implement AI into their editing. So like when they're like looking to edit the movie clips and things like that, that'll help their producers kind of lower the amount of hours needed. One other industry is the banking industry. I believe a lot of the work, again, I'm not in the industry yet, but I believe that from what I've spoken to with other analysts, that a lot of the work is oftentimes repetitive. Whether it's like building up pitch decks, whether it's doing the financial modeling, though I don't necessarily think that's the most repetitive thing. But a lot of these things could definitely be made more efficient. So I've heard that there's some like AI that is able to help you build pitch decks a lot more rapidly, or even financial models that you put like one or two inputs and it's able to create the whole model essentially. So I think those are two industries that will definitely be affected.
Nice, yeah, again, kind of to echo what both of you said, I came in really with anything that is very, I mean, human intellectual capital intensive, like like I just said for Ryan. So that's gonna be consulting, law, HR, research, really anything where there's the biggest output is like the labor hours of educated, supposedly intelligent people. I noticed, and like when I interned in like M&A research a couple summers ago, that when ChatGPT was just coming out, we were realizing that people like analysts were way more productive with it. So I mean, that kind of just can already give a hint. That was a way worse ChatGPT than we have right now. And that if you can already make people more efficient, that makes the argument that you can start, the quiet part out loud is you can start replacing jobs, and then you can find a ton of efficiency in these human-based businesses.
Yep.
Yeah. All right, thank you guys. This has been, what's the name of the podcast?
Top down TCM.
Top Down and TCM.
Top down.
All right, thank you for your time.
Thank you guys.
Bye.
Thank you.